Good afternoon, everyone. This is Dave Duncan here from Duncan Financial Group. We're going to wait about 30 seconds or so just to make sure that everybody who wants to see the whole presentation today can do so. We'll be getting started in just in a minute or so. Okay, we're going to get underway. Again, I'm Dave Duncan, CEO and Chairman of Duncan Financial Group. And the first thing I want to do is thank you for taking the time today to be part of our webinar. We are hoping that everybody out there is continuing to be safe and do all of the social distancing and other things that the CDC and Governor Wolf want us to do. That's very, very important. At one point in time back in the 1940s, Winston Churchill was talking about World War II, and he said, this is not the end. This is not even the beginning of the end, but it might be the end of the beginning. And I feel like that's kind of where we are right now with the coronavirus situation. We've got a lot of runway behind us, but we still got some runway ahead of us. So we're hoping that everybody in your family is safe and sound. Today's subject is tax and accounting, but I want to remind everybody that we also do business insurance, risk management, 401k plans, group health insurance, and human resources. In fact, we're going to be having webinars upcoming tomorrow at 1 o'clock, focused solely on 401k and other retirement plans and the effect that the coronavirus and all the subsequent stimulus packages and acts have had on 401k plans. And then on Thursday at 2 o'clock, we're going to have a webinar concerning group benefits and human resources. So we'll drill down a little deeper into each of those areas than we did 2 weeks ago when we did an overall presentation, overall webinar about all the parts of your business affected by the coronavirus. A couple of housekeeping issues before we get started. Questions can be asked electronically through the Zoom portal. Just type in your question and we'll have time at the end for answering the questions that you all have. Secondly, we will be sending out the slide deck after the presentation. So certainly you can take notes, but you will get the benefit of the slide deck for everybody who's registered today. And we will have a replay available in a couple days on our website, which is duncangrp.com. We're going to begin the presentation today by introducing two of our very best in our tax and accounting department. Dan Vecchio is a CPA. Tony Marciano is an enrolled agent. And those two gentlemen are going to talk about all the different stimulus packages, your options, and how it affects your tax and accounting services. So with that, I'll turn it over to Tony Marciano. Tony?
Thank you, Dave. Good afternoon, everyone. Thank you for taking the time to listen into the broadcast here this afternoon with regards to some of the stimulus options that have been provided for the small businesses, not only to protect the cash flow of those enterprises, but also to retain employment for those small businesses. And all of these options have been provided for by the federal government. And we're going to be spending about approximately two-thirds of our time here this morning on the Paycheck Protection Program. And then the other one-third, we're going to cover the EIDL program, as well as a couple of payroll tax credit programs and payroll tax holidays. So let us begin first with the PPP option, or the Paycheck Protection Program. Good news, bad news. Good news is that Congress had authorized $349 billion to be provided to small businesses, and that was launched officially with applications being accepted for the first time on April 3rd. Fast forward then 2 weeks after that, simply one day after the unofficial deadline of tax season there being April 15th, and on April 16th, the bad news is that the funding had completely dried up, meaning all of the $349 billion had been promised and allocated to the various small businesses. With that being said, though, if you have been watching the news of late, we do trust and we do believe that by Friday of this week, that Congress will once again allot another $310 billion to be infused back into these stimulus programs. Of that $310 billion, though, about $60 billion is going to be allocated toward farms, and the other $250 billion is going to be like that, if you will, of the first allotment of monies, the $349 billion. So again, keep an eye out and your ears attuned to the news there, with the hopes that some of those applications that might either be pending or might be waiting to even be filed once again here within the next couple of days. Our hope and prayer is that the other $250 billion for small businesses will then be allotted. So the majority of people here on this call here this afternoon are going to be in a couple of different areas. One, you've either been approved and these monies have already been funded. Two, you may have been approved, but you're still awaiting funding. And the third is you're basically awaiting the next allotment of funded, meaning you are in the loop and or you are waiting to apply. So at this point in time, no new applications right now are being accepted, either for the PPP option or the EIDL option, nor are any SBA lenders being signed up at this point in time. But again, our hope and prayer is that everything will be recharged and restarted here by Friday of this week, and new applications can begin to either flow in or be processed and those funds to be issued. A couple of items here with regards to the PPP loan. One, you as an entity, the entity had to have been in operation, meaning in existence, on the date of February 15th of 2020. And who this loan, again, is geared toward is that of small businesses. And the definition of that is per location, that business has fewer than 500 employees. The next option here, it is a 100% federally guaranteed loan. So what that means to you as the individual who may own the small business is that there is no collateral required. There is absolutely no credit check, and there will be no underwriting. So basically what will happen is once you provide this information to your local bank, that will then be reviewed by the bank to make sure that you are quote unquote eligible for the funding of these monies. And then that then gets submitted directly to the SBA. They basically will then approve or disapprove the application. If they approve, that money will then be provided to by the banks directly into your small business checking account. And I'm going to turn the next slide over here to Dan, but before I do that, just at a high level, and this is what Dan is going to cover in more detail, basically the amount of the loan that you would be eligible for. And remember, even though this is considered a loan, there is a forgivable feature to this, and we will be going into great detail with regards to how that is calculated. But again, the PPP loan, the amount that you qualify for will essentially be 250% of the average monthly payroll cost for your small business. So I'm going to now turn this over to Dan Vecchio, and he's going to walk through.
Okay, good afternoon, everyone. Thank you for attending here this afternoon. I appreciate it. Okay, we're going to go over the costs that are included in regards to your payroll costs. Now, the government has come out and said that 75% of your loan proceeds, at least 75%, have to be used for payroll costs, and the other 25% can be used for other costs, which we will go over. Now, depending on your bank, there's two different time periods that they were looking at for you to calculate your total payroll cost. It was either the full calendar year, 12 months of 2019, or it was the trailing 12 months starting April 1 of 2019 through March 31 of 2020. Either of those two 12-month periods. So what's included? It is gross compensation up to $100,000 per employee for that time period. There was a lot of discussion about starting out with net compensation and adding things back. That was not the case. You start out with gross compensation per employee up to $100,000 per employee. Then what you add to that is the company paid required provisions of any health insurance benefit, including health insurance premiums. Another thing associated with that, if you have an HSA and you make contributions to that HSA, we believe those contributions on behalf of the company can be included in that number. And let me go back and say, if an employee is making over $100,000, that $100,000 limit is for compensation only. It does not include the cost of their benefits, okay? So it's compensation only. What else can we add to that number? We could add to that number the payment of any type of retirement benefit. That would be any match that you're making in your 401k, or if you have a safe harbor plan, the safe harbor match. Now, according to what we have read and understand, that would be contributions that you actually make during that time period that we're discussing, not any contributions that have been accrued. Okay? In addition to that, you can add state and local taxes. Now, here in Pennsylvania, what would be our state and local taxes? That would be the company's share of the Pennsylvania unemployment compensation that we pay on our employees' compensation. And if you are an employer in the city of Pittsburgh, you pay what's called a payroll tax expense. The company pays that. You can include that number as part of your total compensation for the year, which you would then divide by 12 and take that times 2.5 to come up with your loan amount. Now, if you did the application incorrectly, you added something that you should not, or you did not include something, and the application's already approved, there's really nothing you can do about it at this point. You have to let it be, okay? Things that are not included in that number, real quick, are basically two major ones. One, the company's share of the Social Security and Medicare does not get included. It's just gross compensation. And if you were to have any employees that's primary residence are outside of the United States, you could not include that in the calculation. Okay, I briefly want to talk about some of those other expenses. This is in regards to the forgiveness of the loan. Once again, you could use up to 25% of these proceeds to pay for these types of expenses. One, your rent expense. Now, in order for that to be included as being forgiven, you've had to have a lease agreement in place on February 15th. And you can deduct rent that you pay to a related party. What I mean by that is a lot of the companies may own the building that they operate in some type of real estate partnership, and they pay that partnership rent every month. Even though it's a related party, as long as you had a lease agreement in place, you can deduct that cost. In addition to that, you can deduct utilities. What utilities are we talking about? We're talking about gas, electric, water and sewage, telephone, which we believe includes office phones as well as mobile phones, and internet. In addition to that, if you own the building inside of your company and you have a mortgage on the building, the interest on that mortgage can be deductible. Now, there is question out there in regards to including the interest on other debt obligations. And according to the Act, it says that you can use the proceeds to pay other debt instruments. But when it details what is forgiven, it does not include the interest on those other debt instruments. So as we speak, it's only the interest on mortgages that can be forgiven, not on other debt instruments. And with that, I'm going to turn it back over to Tony.
Thank you, Dan. For the folks here that are on this telecast here this afternoon, those who are self-employed, I want to talk about what items of documentation per se that they will be looking at in order to determine what that loan amount available will be. So for those who are self-employed, and here I would be referring to your Schedule C independent contractors, or your sole proprietors, or your single member LLCs. That would be those who are a disregarded entity, meaning there is no separate filing for federal income tax purposes. So for any Schedule C filers that include the net profit, if you will, of your business simply on your Form 1040, what the bank will be looking at, and thus ultimately what the SBA will approve based upon, is either your 2018, or if you have already filed it, your 2019 Form 1040 Schedule C. That's going to be your net profit. So again, if you are a sole proprietor, single member LLC, that's a disregarded entity, or any type of independent contractor that would file a Schedule C, your PPP loan amount is going to be based upon either your 2018, or if you filed it, your 2019 Schedule C that would be included within your personal income tax return. If you are a partnership, this would be a general partnership, or this may even be an LLC, a 2, 3, 4 plus member type partnership there, a partnership that would have 2 or more people that would file a Form 1065. So it would be an LLC or a general partnership that is not elected either C Corp or S Corp status. The partnership, how they would provide amounts for the PPP loan would be via their Form 1065, their federal tax return. What the bank and thus the SBA would look at would be the guaranteed payments. So essentially, if you are a general partner within a partnership, or a general partner within an LLC, thus an LLC member, and you take guaranteed payments, in effect, that is deemed to be compensation or salary as the partner in a partnership. So therefore, you would add up not only your guaranteed payments, because those are subject to self-employment tax, but also your ordinary income, assuming that you subject that ordinary income to self-employment tax. So for example, I'm a partnership, I'm a 2-person partnership, I have a guaranteed payment that I take of $25,000. My partner takes a guaranteed payment of $25,000. I take a look at all of my revenue, all of my expenses, including the guaranteed payments, and I come down to a net profit that we subject to self-employment tax of $30,000. For purposes then of the PPP loan, we would add up the guaranteed payments, that'd be a total of $50,000, and then we would add in the net profit, the net income, if you will, of the partnership, that we would also subject to self-employment tax for a combined possible loan amount that would be $80,000. From there, again, we would divide it by 12, multiply it by 2.5, and then again, add in any of those other items there that was covered there by my partner, Dan Vecchio. So again, the key with the partnerships is that the net profit, in order to include that, that had to have been subject to self-employment tax. For your traditional C Corps and S Corps, all that we are looking at is payroll. No dividends, no shareholder distribution. So again, in a C Corp, all that we're looking at is total payroll. We're not looking at any dividends. In your S corporations, all that we're looking at is payroll. If you take any draws or what's deemed to be shareholder distributions or shareholder dividends, those will not be included within the monies eligible for the PPP loan. Now, very quickly on the application process itself, remember, you should go to your local bank, and your bank needs to be an SBA lender. And here is what we are seeing based upon the experiences that we have had with our clients. The majority of our clients that we have that are small business clients have in fact applied for either the PPP loan or the EIDL loan. In addition, we've had some that have actually applied for both. The one has gotten approved and the other one is currently pending. Now, in our experience with that window opening up on April 3rd, the typical turnaround time that we are seeing for funding is approximately 10 calendar days. So for example, our first client that we submitted to their local bank, and thus our assumption is then that that loan was then forwarded to the SBA on that day or the day after, that being Saturday. The first funding date of our client that submitted an application on April 3rd was April 13th. So we're essentially looking at 10 calendar days is about how long that process took. Now, again, the key is that whenever the bank is reviewing that information, they need to be in contact with you. If they are not, you need to be diligent about reaching back out to them. And even though they are swamped with applications, you need to make sure that you reach out to them. Because if not, you don't want to be one of those companies that is lost in the shuffle, knowing that there's still some information there that you need to now get back to them. Where we have seen challenges is whereby if we are not the authorized provider of that information and the client is, and the client then is not responding or providing to us the information that they need back for a couple of days, then unfortunately, we're seeing then some of those clients get an email or a letter from the bank saying that unfortunately, any and all allocated monies of the $349 billion have already been provided as promised, though we will keep your application on hold for that next set of funding, hopefully that we again will hope to be released here by the end of this week. But unfortunately, we have not been able to provide those funds to you on this initial run. So again, the key is reach out to your bank, stay in contact with the banker or lender that you are specifically working with, and stay on top of them, because those clients we have worked with and that we have stayed on top of, those are the ones who have gotten funded. Now, one more item. There are a couple of banks that we have been working with that we had from the client an indication that in fact the application had been approved and that the monies were going to be funded upon receipt of the signed loan documents. And then the following day, the clients then received an email stating that unfortunately their application was unable to be approved and submitted in time, so therefore it will not be funded. And then a couple of days after that, they then received another email, included the loan documents, and then in fact, the loan was then funded. So again, there was a lot of confusion. And again, I think it's due to the unbelievable interest, not only in the way of small businesses, but also from that of banks with the hopes of generating some new clients and new revenues, that ultimately this is being delayed. But again, for those on the line, the turnaround time that we're seeing is approximately 10 calendar days. Now, Dan, I'll go ahead and turn this back over to you.
Okay, thanks, Tony. I just want to add one more thing to what Tony said on your sole proprietorships and the partners in the partnership. We still have that $100,000 limit. So even if you're a partner in the partnership and your guaranteed payment and your share of the income subject to self-employment tax is, let's say, $120,000, you're still going to be limited to $100,000 per partner, okay? Real quick on the repayment terms of these loans for the amount of the loan that may not be forgiven, okay? It's going to carry an interest rate of 1%. In addition to that, there's going to be a 6-month deferral. So for the first 6 months, there's no payments due. Remember, after that 6 months is over, we're going to know how much of the loan is forgiven and how much is not. The balance of that loan that is not forgiven is going to be paid back over the following 18 months at 1% interest of paying principal and interest. So basically, whatever part is not forgiven needs to be paid back over 18 months and within 2 years of you receiving your funds. Okay? Back to you, Tom.
Thank you, Dan. The item that I want to now cover, and again, we need to keep an eye on the clock here. I'm assuming we'll go about another 5 to 10 minutes. We want to try to hold to about that 30-minute timeline, maybe go about 35 minutes and then have a brief period of time there for Q&A where some of these areas we may need to go into a little bit more detail with. But the issue that I want to bring up is that what we're seeing, and likely for those who have already received their funding or will be receiving their funding, as many of you know within the state of Pennsylvania, that assuming that you are not an essential business, what happens is that the majority of your employees, if you will, have been laid off and they're now collecting unemployment compensation. So the dilemma that you're going to run into is that you have now received that funding, and the funding basically begins on that day where the loan has hit your bank account. You then basically have the covered period of 8 weeks in order to distribute those funds. So if you are the owner of a small business and you are still in effect closed up and your employees are collecting unemployment, and with the federal stimulus payment on top of the state unemployment compensation payment, they too are in a dilemma, because if they were to come back and work for you, they may end up making less than they are receiving currently in the way of unemployment compensation. So in effect, basically what you would do is you would need to pay them not to work. But again, that would only make sense in effect if you're going to pay them, and what you're going to pay them is going to be over and above what they are currently making, if you will, or receiving in the way of unemployment compensation benefits. So the challenge there that we are hoping is that maybe, and just maybe, there's going to be some leniency on this. But as it states that the day that you receive that funding in your bank account, you essentially have 8 weeks in order to spend those monies in accordance with how Dan had mentioned. Now the forgivable portion, and it's a relatively challenging calculation here, and I want to do it at a very high level, but I would love to have the opportunity to kind of take this detail offline for any of you who are participants and may or may not be working with your accountant, but you have questions and you'd like to reach out to me directly at the end of this presentation. We're going to have all of our contact information there, and we'd be happy to kind of work you through this calculation. But for the forgivable portion, and remember, of the total PPP loan amount, up to 75%, meaning at least 75%, needs to be utilized toward payroll and payroll-related items. And the forgivable feature will be reduced if a business either cuts employees or slashes salary during this certain time period. in this certain time period is basically that covered period, that 8-week period when you have access to the monies. In the CARES Act basically provides that the amount of loan forgiveness is reduced by multiplying the amount eligible for forgiveness by the quotient obtained by dividing this. The average number of full-time equivalent employees per month employed by the eligible recipient during the covered period. Meaning, taking a look at it on a per pay period basis over that 8-week period, we're going to assume, for example, that over that 8-week period, you had a total of 30 employees. You had a total of 30 employees. Now, that is basically going to be the denominator. That's going to be the denominator, 30 employees, okay? Now, at the election of the borrower, you now can either use one of two numbers. The average number of full-time equivalent employees per month employed by the eligible recipient, that would be you, the small business, during the period beginning on February 15th, 2019 and ending on June 30th, 2019, or you can use the average number of full-time equivalent employees per month from the time period of January 1st, 2020 and ending on February 29th, 2020. So if a business reduces employees, for example, from February 15th through April 27th, 2020, but eliminates that reduction by June 30th, 2020, the reduced forgiveness is restored. So again, let me give you a very, very brief example. Over the covered 8 weeks, we bring back, if you will, 24 employees. So we now have 24 that are considered full-time equivalent employees. If we go back to the period of February 15th of 2019 and ending on June 30th, 2019, or we can also use, remember, January 1 of 2020 and ending on February 29th of 2020. And let's assume during one of those two periods, we had 30 employees. So we brought back 24, but our look back period was 30. What does that mean? Our utilization is essentially 80%. So if we were offered a $100,000 loan and $75,000 of that we're going to use, if you will, for payroll purposes, and we would take 80% of that $75,000 amount, and that $60,000 would then be forgivable. The other $15,000 would not be forgivable. The remaining $25,000 to get to the $100,000 could then be used, as Dan had mentioned, for rent, mortgage interest, utilities, group benefits, retirement plan contributions, etc. So again, that's a detailed calculation, and we'd be happy to go through that at a later point. But I did want to highlight that information to you. So Dan, I'll go ahead and turn this back over to you.
Okay, we're going to talk about real quick the taxability and deductibility of this. The taxability is very easy. If you get any loan forgiveness on your PPP loan, that loan forgiveness will be excluded from income. It will not be taxable. Now, will the expenses that you pay with that loan forgiveness money, will they be deductible? Maybe, okay? Because if you think about it, we're actually double dipping here because we're not going to pay tax on the forgiveness of the loan forgiveness. We're not going to pay tax on that income, yet we're going to deduct expenses with that money. So according to the CARES Act as it is, it's actually silent. And there's a code section 265 in the Internal Revenue Code that says expenses paid with tax exempt income is not deductible. So we're not sure what they're going to do here. We believe Congress wants to be very generous here with us because of what's going on. So our feeling is those expenses are going to be deductible. But as we speak, we cannot say that for sure, okay? The other thing I want to go over real quickly is tracking of these expenses. You know, after this 8-week period, you're going to have to provide documentation to your bank in order to get these expenses forgiven. So you're going to want to keep very detailed payroll reports for the next 8 weeks. Any invoices for group health insurances that you're paying with this money, keep track of those. All of your utility bills, you're going to want to make sure you have a copy of your lease agreement. And also any loan payments. You're going to kind of want to keep these things in a file so that when this 8 weeks is up, you could basically turn all this documentation over to the bank in order to get a good portion of your loan forgiveness withheld. This is going to be very important. You don't want to be scrambling at the end, okay? Real quickly here, Tone, you want to go?
Sure, will do, Dan. We have about 5 minutes left here. And what we're now going to do is we are going to briefly cover the final remaining stimulus options here that are provided by the federal government here and also the SBA. The one other high level, if you will, loan option is the EIDL loan. And very few of our clients have applied for that. We've only had one so far that has actually been approved for that because the majority of our other clients, even though they may have applied for both at the same time, they've already have been approved for the PPP loan, and they will basically max out, if you will, the monies on that toward their payroll and other items. But the EIDL option, this is more or less a true loan, if you will. It will require, depending upon the loan size, collateral. There may be some federal underwriting, if you will, guidelines and credit checks. The EIDL is very similar to that of like the PPP in terms of how those typical monies are going to be utilized. But here, the major difference is that the entity needed to be in operation on the 31st of January. This loan option does provide for an immediate $10,000 grant, if you will, that does not need to be repaid, and that will typically be funded in your bank account within 3 days after the approval of your application. Again, that $10,000 grant, in the event that you receive the PPP monies, that grant should come off of the total amount that you would receive from the PPP loan. Now, again, the repayment terms or the borrowing terms on this EIDL loan, as opposed to the 1% rate that Dan had mentioned with the PPP loan, the EIDL loan will typically carry for a for-profit business an interest rate of 3.75%. If you're a nonprofit, that gets reduced down to 2.75%. Basically, the SBA has agreed to waive any payments, if you will. They've deferred any payments until the beginning part of 2021. And in terms of the actual loan repayment period, it can go up to 30 years, but the actual term is going to be based upon your financial condition as a business and as determined by the SBA. So again, the EIDL is an option, but just like that of the PPP, the funding for those also has dried up. So again, we're hoping too that those monies would be included within the new allotment, hopefully coming here by Friday. And then Dan is going to walk through the final options here for the presentation, and then we're going to jump right over to the Q&A. We appreciate your patience.
Okay, last two things to cover. First of all, if you received a PPP loan, you don't have to listen to this. You will not be eligible for either of these two credits. The first one is the employee retention credit. That is, if you were affected by the COVID-19, and that means that your sales for the same quarter of this year versus last year are down by 50% or more, you can get a credit up to the first $10,000 that you pay employees, including healthcare benefits. Okay? The number there is 100 employees. That's what's important. If you have over 100 employees, you can only include those wages that you're paying to employees to stay at home. If you're under 100, you can deduct any of those wages, whether the employees are working or not. And basically, once again, it's 50% up to $10,000. You get to take a credit against your payroll taxes. So when you file your second quarter payroll tax return, you would take this credit and then get a refund from the IRS for that. The second one is very simple. It's called the Employer Payroll Tax Holiday. You can accumulate from March 27th of this year through December 31st. You can accumulate all the employer share of the Social Security and Medicare taxes, not pay it into the government. At the end of this year, you have that total number. You can split that total up and make payments of half of it by the end of 2021 and the other half by the end of 2022. But once again, if you received a PPP loan, neither of these credits will be eligible for. Okay? All right, I'll take the first question here. How long is the funding process taking? I think Tony mentioned that in his presentation. It is taking about 10 days from start to finish to get your funds. Tony, I'll let you do question 2.
Danny, do you want to go ahead and take question 2, and then I'll go ahead and address questions 3 and 4?
Sounds good. Okay, question is, the PP and the 25% for utilities, do you think security system monitoring is included in that category? I would say yes, it is, but as I read to you in the law that was passed, it does not include that. So what I would tell you to do is quite possibly reach out to your bank and ask them if they can give you a definition of what they're going to take as far as utilities go. I don't want to tell you it is covered and then you send it to the bank and it isn't, because ultimately how the bank is basically interpreting these laws is how it's going to get answered.
Thank you, Dan. Interest on a building mortgage. Yes, that would be included within the 25% portion. And as Dan had mentioned, the regulations are relatively vague to that effect in terms of what types of indebtedness would the interest qualify for, forgiveness for, meaning that it appears based upon the way that the regulations are written that only the interest on a mortgage would be eligible for forgiveness, even though any and all interest would qualify as monies to be used. But the question comes in if you would use these monies, for example, on interest on leased equipment, interest on a line of credit, interest on credit cards, interest on term loans or installment loans, would in fact those be forgiven? My thought is that further clarification is going to be provided here. And we were told that within 30 days, so basically 30 days from the April 15th day is when we were told that we should have some additional clarification on those items. My initial hunch is that this will be an option to be part of the proceeds to be used as part of the 25% and will be forgiven, meaning any interest on a loan, line of credit, mortgage, credit card, those types of interest, my hunch is that they will be included in the forgivable loan feature of that. Dan, do you want to go ahead and take the retirement plan?
Yes. The question is, retirement plan contributions, safe harbor contributions, that is, would that go in the calculation of the 75% payroll or the other cost? That would definitely be included as part of the payroll costs, okay? Not the other expenses. The other quick thing I wanted to mention is when you apply for your loan, the bank is going to give you a PLP number that's basically the approval from the SBA that says your money has been approved and allocated. And then from that point, they basically have 10 days to get the loan documents signed and funded. So that's just a little further explanation for question number 1 there. And Dave, I think that's all the questions, so we'll turn it back over to you.
Thanks, Dan. That's a lot of information, and I really appreciate you guys giving us all that info in such a compact period of time. I want to remind everybody, if anybody needs any help and assistance in the PPP loan process, the EIDL loan process, any of the payroll tax holiday information that we went through real quick, we're definitely there to help you, to let you know how Duncan Financial Group is doing now. We're doing business as unusual. We have all of our employees working, and 8 or 10 of them on any given day are still at our physical location in Irwin, and the other 95 to 100 are all working and all working remotely. So whether you have a question, whether you have a claim, whether you have any type of issue with your insurance, your investments, or your taxes, we've got a full staff of people there being able to help you. I want to remind you, we are having a webinar again at 1 o'clock tomorrow concerning the 401k and retirement plan area. And at 2 o'clock on Thursday, we'll have one concerning the group and HR area. On your initial invitation to this, you had the ability to, you had the registration for all of those or any one of those. So if you need that link, you can contact Tony and Dan. You can see their emails and phone numbers up there, and they can get you the invitation to the next 2 if you haven't already registered for that. If you've already registered for that, you're fine. You don't need to do anything else. So with that, I'd like to, again, thank you all for your attendance. Thank you all for your time. Many of the people who are on the webinar right now are existing clients of Duncan Financial Group's Tax and Accounting Department. I want to thank you for your business and your loyalty. So again, stay safe, do what the government says, and we'll be through this. Then we'll be through this together. Have a great day.